This is the brief on the evolving role of the global head of indirect tax. The indirect tax function is no longer just some back-office chore focused on avoiding penalties and filing returns. It's actually sitting on the absolute richest, most strategic data set in your entire enterprise. First, we really need to talk about how governments are changing the rules. Under new continuous transaction controls, where authorities basically check your digital receipts in real time, tax leaders absolutely have to get a seat at the IT table. When upgrading core software, tax experts must dictate that compliance logic from day one. Letting IT build compliance systems without tax guidance is honestly like building a house and only calling the plumber after the walls are completely closed up. Second, because tax is now hardwired into real-time tech, you're suddenly capturing a perfectly validated global record of your business. This data shouldn't just be discarded. It can optimize cash flow, guide market entry, and even flag supply chain risks. Because a supplier failing tax validation is a huge early sign of financial distress. Think about it. Why take our absolute richest financial data set, hand it to the government, and then literally just throw it in the trash? Finally, to keep that strategic data flowing without massive disruptions, leaders got to look ahead, not behind. With global e-invoicing rules accelerating fast, you need to track emerging requirements 18 months before they take effect. We have to challenge that old mindset that compliance is just a defensive sunk cost. Anticipating regulations early turns compliance into a literal competitive advantage that reactive competitors simply cannot match. Ultimately, the modern head of indirect tax isn't just managing risk. They are organizational architects turning compliance data into pure strategic gold.